The number keeps increasing at a rapid pace. No sign of slowing down now as we track the dollar to silver ratio. $694 silver. Let's explore. The pace at which these dollars, compared to the amount of silver ounces that are mined per year, continue to increase. And that's what we're tracking here. This is part of a playlist I'm going to show you right now on the channel that I've been doing for the last 5 years. And this is quite intriguing. It's probably worth going back in time to see exactly what has been happening through the years. You can see these numbers have been all over the place, mostly increasing until such a time as it was when it actually stopped. That's right. And I explain all of that. I encourage you to check it out if you have time, the playlist on this. But first, before we continue discussing more about what this is happening with the debt clock and why these numbers are showing what they're showing, we have to come to an understanding exactly what this number means. I need to do this every single time because invariably people will get confused and frustrated because they think that I'm talking about the price of silver. No, it's a more important number than the price of silver, believe it or not. Let's take a wider view here and take a look back here. There's a lot of numbers on this screen here. But what this is, when we say $694 per ounce, $694 per ounce, this means that the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. Now, there's an asterisk here. That asterisk is no longer on the U.S. debt clock page. It showed when it was $0. But it says here in red, the U.S. M2 money supply is declining year over year. But that's not true anymore. They need to update their page. So what this is, it's how much money is printed in dollars year over year divided by the yearly world production of silver and by the USGS. So that means that either that they're mining less silver or they're printing more dollars. And they probably are mining a little bit less silver, but not by that much. They indeed are printing more dollars. Here is the proof. Fred tells us the truth. The Federal Reserve Bank of St. Louis, they have these statistics here, and you can see how they started to uptick again. So when we narrow this, we can see it more dramatically here. Now we know what happened here when we had a recession. The world changed in 2020. We know what occurred there, and that increased the money supply. And so such a time was when we had quantitative tightening for the first time in a long time. But that tightening really didn't do a whole lot. In fact, we had a little bit less. Some money was taken out of the money supply. And so for a while, there was no metrics because there was less money going out. There was less money going out and more money coming back to the Fed, which is what we need. We need to constrict the supply of dollars. But that has now changed. Now they're ramping back up again to the tune now where there's about $1 trillion spent every 100 days in this country. And I'm going to show you some more staggering statistics here. That means that M2 money supply is increasing. We can really see it here when we narrow it down and squash the ratio. We can see the tightening period here and how it's ramping right back up again. It's crazy. There we are again. And that is happening along with easing policies with lowering the interest rate now to the tune of a 0.5 percentage point right now. Some say before the end of the year it'll be another 0.5 percentage point, which means a full 1% drop in rates. Now, if we go back and look at this, the debt clock, we can see here what's happening. Look at this. There is a lot of government spending to the tune now where we find ourselves at $35.6 trillion. And that is unsustainable, but it's been unsustainable for a long time. The unsustainability will only face a reckoning when people lose faith in the dollar. But right now, apparently Americans don't seem to care in a general sense. You and I do. That the U.S. federal budget deficit has now increased to over $2 trillion annually. and that's what they show now. But there's $1 trillion every 100 days. But that is the numbers we see right now. But if we go back in time, we can see that back in 1980, we didn't even have $1 trillion in debt. And we're spending more than that just in the past couple of quarters here in the United States. That gives you some perspective here when you take into account everything that's happening. Fast forward 4 more years, and we've got ourselves almost $4 trillion in deficit spending at the pace we're going right now, and over $47 trillion in debt. And these numbers really are just that. They're just digits on a screen. The Federal Reserve really doesn't print that many actual dollars, actual cotton linen fiber notes these days. They are essentially just digitizing it all. And they can bring it out and pull it back at their will. And this is probably going to be a point in time in 2028 where we're literally going to be very close to a central bank digital currency. Then everything will change. One other thing I want to show you before I talk a little bit more about silver and what this means and why that's so important, and that is the velocity of money. This is the velocity of M2 money stock right now. We can see that it greatly decreased in 2020, leading to an inflation rate of about 1.5% for obvious reasons. But we can see what happened through the years of velocity of money, the booming 90s here. But that's money essentially that was flowing naturally. And this is good money. This is, well, if you want to call fiat dollars good, you can question that, and I do question that. But that's money that's circulating between business in the economy, not being injected into the economy. Very different. Dollars that flow in and out of the economy because of work, actual work, is one thing, even though they are still being inflated at a natural, or the target rate of 2% per year. This is unhealthy. This is unhealthy flow of a recovery here, because a lot of that is money injected back into the system, and which propping up the numbers by stimulus. If we take a look at here since 2020, we can see that velocity of money, and we can see how it's just increasing here. And these dollars essentially are what is being injected. Quantitative easing is what they call that, when they inject all this money supply, which is the underlying philosophy behind that is modern monetary theory, which springs forth from Keynesian economics and theory. And that there's really nothing modern about it, and it's not really a theory, and it's really just kind of the ghost of money, not really money itself. What is money itself? Well, it is indeed silver. Silver is indeed money. Through the course of history, it has been the longest standing, more exchanged metal ever in the history of the planet. And it's really only until recent history where that has not been the case. So therefore, now it is passive money or commodity money. Silver has a unique role in that it does provide a way to protect us from economic instability, which is definitely a great thing over the long course of time. But it also is a commodity, and it has more uses than any other metal out there on the planet, which is, I think, is inspiring, I think, for most of us to have it in our possession in physical form. So when we take a look at this number, circling back, if you will, to quote a phrase from Jen Psaki, if we take and zoom right back in here to what this is, this $694 per ounce. When we see that, we know that the velocity of money, as well as the M2 money supply, is increasing. Essentially, we're back into quantitative easing yet again. That's right. And remember, the pace is picking up. That's the theme of this video. And when we go back and look at the last video I did about this just a month ago, a little over a month ago, it was at $426 silver. And so it is really picking up, getting close to, it's going to be doubled probably here fairly soon. So that is the backdrop that we find ourselves in with this $694 per ounce. as the dollar to silver ratio. Why is that more important than the price? Because the price will fluctuate, but sooner or later something is going to give in terms of the price, and we're going to see higher floors for silver, and those which means support for silver's price because of the amount of dollars that are out there. That's inflation. Silver is a hedge against inflation, believe it or not. How can you measure that? How can I be so confident to say that? Well, I can say that because over the long course of time, if you take a 120-year chart of silver and draw a line through it, with inflation-adjusted prices, silver is about the same all the way through when you average it all out. In fact, actually, it's up a little bit beyond that. So it's actually performed better than inflation. Now, one thing is for sure, this year we are in the midst of a silver bull run, a rally, if you will. It has gone up over 35% so far this year. That is something to celebrate, folks. That means that silver's finally coming around, although we should always expect consolidation pullbacks in the market. It happens from time to time. And even if silver loses $5 or $6 per ounce, it will come back around again. It will adjust. And usually it adjusts upward in price, therefore maintaining a stable store of value through the long course of time, especially if you dollar cost average. So there's that. There's another number I want to point out here, and that is the dollar to silver ratio over 5 years. So when you take into account how much is silver and how much money has been printed over the last 5 years, especially with what we just went through 4 years ago, well, there you go. It's a pretty big number. A very big number there. Average it out to 10 years, it's still a very large number, because this accounts for the tail end of quantitative easing, as well as the pandemic and everything else. Averaging all out, there it is, which means that this number is picking up the pace year over year. And that is where we find ourselves in now. So this gives you a little different perspective on silver. This channel is unique in providing this information based off of the debt clock, and give you a little bit more of a paradigm shift of thinking with silver. And I hope it encourages you to continue to press on, hold your silver, and buy some when you can. In other words, when your budget allows. So let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.